I think they're at what they're doing. Just noting that the Scottish vote over the weekend, they had a poll. Their vote is on the 18th of September, but they had a poll as to to be independent for the first time. That went in favour of independence, and that's obviously going to have a negative effect on the pound. So that's why you see that large gap. Gaps do tend to come back and be filled in, not necessarily on the on today's trading, but it's I would look at it maybe in the next day or next session or so that it should come and fill this gap back in. It could do it in today's session, but more likely probably tomorrow. So there's only 2 emails to go through today. Not sure what you guys, or if there's just nothing setting up, or if everybody's just had enough of these market conditions. But 2 emails came in yesterday. Is it the question here? Is it the Scots that is solely responsible for the drop in the pound? Not solely, not 100%, but it's certainly a larger portion of the weakness in the pound. The pound sell-off started well before this. Scots gained momentum. There was some weakness in some of the economic data coming out of the UK, and there's very strong US dollar, which is also pushing this. But this gap here is certainly very much a Scottish issue. There's nothing else that's really happened that I'm aware of out there, and everything else is sort of gapped higher with a weaker US dollar. So there was some gap down a little bit. The Kiwis gapped down a little bit. Okay, yen has gapped a bit. CAD is doing not much. So this large move here is certainly responsible to the Scottish, but not all of this move from 72 has been the Scots. Just in the most recent times, I would attribute it to it. So first one we're looking at is the pound Swiss. But this came in yesterday. Higher highs, higher lows. Obviously, that gapped lower this morning, and I'm not sure if you got your trade in. Obviously, you can't place it until the market's open. If you hadn't done this on Saturday morning, and the fact that you sent this mail on Sunday, I would suggest that you didn't get it in. But we've got your Fibonacci from here. It's an interesting point to put it from. I presume this is the 20, 50, 200. Looks going long. Horizontal support. Yep, this one here. EMA support. Above the 50s and 200s. It might have been at the time. RSI convergence, yes. Bullish price action, ring low and will have formed. This will be an aggressive entry. 382 of the longer trend move. And 786 off the last long move. Trendline support. Any resistance. Hidden divergence. Am I within my trading rules? Yep, okay. Look, that's... Oh, good. You've done the fib from here. I would have probably done it from there. And we can see that the 50 is pretty good support. I'll note that you've also done a fib from here and said you've got the 786. Obviously, this gap down is going to ruin it. You certainly did have a ring low there, but then inside sort of not much day on Friday. The question now is, does it still fit your rules? Well, It's under this trend line that you've got. Under this trend line here. But it's also underneath that support level. So obviously this would knock you out and say, well, I need to reassess things because this certainly isn't doing what we expect it to do, thanks to the Scots. If I would have placed a sell stop Friday on the pound Aussie, would have it been filled at the open today? Okay, so that's with this one. This has all looked good. Obviously today's bar means that we need to reassess that trade and not be looking at it. But for today, that your entry and reasons for entering it were sound. So the pound Aussie. Someone else wants to look at the Kiwi Swiss. Whoop. The pound Aussie. If you had placed a sell stop on Friday at 73.86, 73.86, in there somewhere, you would have been filled. 73.86 in there. If you'd got this in before Saturday morning, the close at 7 a.m. on Saturday morning, you would have been filled down here at the open price or thereabouts. So that open price is 72.59. So you would have been slipped 140 pips, 120 pips. Yep. Okay, Kiwi Swiss uptrend and LTB. Well, there's certainly strong buying coming in across there, isn't there? And you're above this support line. The only issue with this one, I'd be looking at, you 150 pip stop or thereabouts. I mean, that's the safest place, right? So therefore you're looking at, you need to get 300 pips out of this trade. And is that going to be the case? The concept of using ATR may adjust that. Your average true range on this. Your average range, talking 50 pips, 57 pips. So if you had a 50 pip stop, so therefore you 50 pip stop is in here somewhere. And you'd be looking at a 100 pip run, take it back up to those highs there. That is something you could be considering. Again, you need to do your analysis. And I'm okay with you using ATR as a stop or as a trade management tool to get a better risk reward in a market that's possibly not going to give you 300 pips out of this. Yep. Still need to have all the reasons for you to be looking at this pair to be going long. Fundamentally, it's the Kiwi is kind of bottomed at the moment and getting divergence. And the euro or the Swiss is certainly under a lot of pressure, thanks to Mr. Draghi and a pretty piss poor economy. We'll then go to the rand and yen. It's been in a range between a range since March. So look, it's been in this range you're talking about, between $9.40 and $9.90. Fair enough. Also has been trending up, and dollar yen is overextended at a strong resistance line and showing bearish divergence. All good for a short trade on the yen rand. Yen rand, rand yen. It's probably too risky for me with, but I'm interested to know what you think. Certainly at the top end of that of this wedge, and there is some resistance around here at $9.90 or even 10, but you'd probably say $9.90 as highlighted by these highs across here. Yeah, so I'd agree with that. And you've got divergence. Let's come in here. There is divergence there. We've got resistance. You've got your 618. Personally, I'm not doing phase 2 trading until I get my account back in order. But this is potential retracement to the trend line is sound range reversal down to here to $9.40. What's the risk? Risk in pips is 150 pips. That's 1.69. Going back down to here. Okay. I agree with you. I think the yen is overdone. Obviously, you're not going to be looking at it with this today's bar looking like it's going to be a higher high, but certainly this is came up and tagged that, and we have the clear divergence off a resistance line. I'd be expecting this to come back down to sort of the 104 area at least. But that's the dollar yen. You need to see what the rand is doing as well, I guess, in terms of supporting this. So you need the rand to be weak, and that's just a mess, isn't it? A bit like the gold price just going nowhere. Also like the Aussie just going nowhere. And the Mandela plate is coming back home to Australia. That gives you no idea where the market price is going. You know, I'd say that's going sideways, so to be driven, this pair would be driven by the yen. You'd have to say the yen is weak at the moment. Yes, the dollar yen is coming up against resistance, but that could be just a dollar story more than the yen story in this case. So you need to trade this off its own merits, and I think what you've highlighted has its own merits. You're at the 1.618. You're at this resistance line that you've identified that over time. Quite a bit of selling here. Obviously, we just need to see that come through, and it's an inside bar. There is potential that it could come back down here and get you in over the next 24 hours. Yep. It's worth looking at. As I said, I'm staying away from phase 2 trading at the moment. but there is something in what you've looked at, and your analysis is sound. We can't fault that. All right. I'd love to have more for you guys, but that's all I've got. As I said, I'll go through the pairs and email out what I think and where I think things are later today. But it's going to be a quiet old day. The majors are not doing much at all, and that's generally the case on a Monday. But now with all the central banks out of the way from last week, we hope that the market will be left to its own devices and be able to find some opportunities. I prefer to be trading with the trend than against the trend. However, there's a lot of trends that are at the edge or at the end of them, such as that and that. But if you guys haven't got any questions for me, and I've got no emails to go through, we'll call it a day. You guys still there? Cool. Alright, just had another question, is fundamentally, is the Kiwi likely to rebound? Look, the interest rates are relatively high, and as the US may not be raising rates because the jobs data came out on Friday night that it was a little weaker. The higher yield of the Kiwi interest rate market is attractive. It's probably holding price up as similar to the Aussie, and it has come off a couple of pips. I think it should be valued around 80, between 78 and 80 cents, but that's just my personal opinion. There's certainly, this could bounce here. It's a phase 2 trade. If you're wanting to trade phase 2, then there's certainly an opportunity there. It's not something that I'm personally looking at, but fundamentally, their economies are doing okay at the moment. It's not setting the world on fire, as Australia is not either. But yeah, fundamentally there is potential for a bounce here. Okay. Well, thank you guys. Appreciate your time. We are on this week for Wednesday and Thursday, so I shall chat to you on Wednesday. If you need anything, please do not hesitate to email me. Thanks, guys, and we'll see you on Wednesday.